Thank you, ET Now and Times Group, on this important topic, PSUs, India's Monumental March. Let me just begin by saying that, Indian economy is one of the fastest growing large economies in the world today. And PSUs are an important segment of Indian economy. They participate in some of the important sectors, and they are pretty important in some sectors. In others, they also contributed a lot towards the vertical integration. In some areas, they are, in the supply chains, provide a lot of opportunities to our MSMEs. We have, just to give you a glimpse of the CPSE universe, there are about 402 central public sector undertakings, enterprises. Out of that, about 254 are operating and about 84 are under construction. Of course, there are certain CPSEs they are under closure too, because as you know that with businesses, you have some businesses which carry on and some businesses do, wither away as a matter of time, with changes. And so therefore, some businesses also get to be closed. But nevertheless, we have got 164 parent companies. Of course, there are certain subsidiaries and JVs under them. If you really look at it, the size of capital employed and income is pretty considerable. We have gross turnover or revenue of about 38 trillion rupees, 38 lakh crore. A net profit, annual net profit is about 2.12 lakh crore. That was as of FY23. Capital employed of about 38 lakh crore, which is 38 trillion rupees. Net worth of about 18 lakh crore. We have 65 listed CPSEs in the stock exchanges. And as of yesterday, their total market cap was 45 lakh crore, 45 trillion rupees. Look at some of those public sector banks and public sector insurance companies. We have about 12 parent PSPs and 7 public sector insurance companies. They have together a market cap of about 25 lakh crore. So if you really look at the universe, it's about 81 listed companies and PSBs and PSICs where government has more than 51% share. And we have got 69 lakh crore as the market cap as of yesterday. So it's fairly large, as you know, as per the size. And I would also come to, a little later, how, it has grown in the last few years and how some of those PSUs have really become very important, stocks in the market today. Well, if you really look at the contributions, apart from the statistics that I have given, there are certain more important, some other statistics too, which give you the size of the impact they have. For example, look at the contribution of all the CPSEs to central exchequer. If we consider the excise duty, custom duty, corporate tax, interest on central government loans, dividend, other duties and taxes, it was, as of FY23, in that year, it was about 4.5 lakh crore. So they contributed about 4.5 lakh crores to the exchequer. Now, if you really see the CSR expenditure, which is, of course, as you know, as per the Companies Act, they need to, all the profit-making companies are supposed to have a certain percentage of their profits, average net profits over 3 years to CSR. It was, in the case of CPSEs, for 166 CPSEs that were eligible in 22-23, it was about 4,000 crore, which was the CSR expenditure. If you look at the R&D expenditure, in all these CPSCs, it stood at about 7,200 crore in FY23. And if you are really looking at foreign exchange earnings, that was about 1.6 lakh crore in 22-23. So they have a fairly important contribution. Of course, we know that as Indian economy has liberalized, it's not, we don't believe right now in sort of anybody having commanding heights of the economy. And that was the time. But since liberalization, especially after 91 and subsequently, almost all areas have been open for private sector. So therefore there is, because the aim, the Indian economy has to grow, they have to grow as a competitive economy, not an economy where it's sheltered from competition. Competition will come from within, competition will come from outside in terms of, outside imports. So therefore, the competitiveness of the economy has to still grow. India aims to be Viksit Bharat by the year 2047, and we have 100 years of independence. And we have to move towards more competitiveness, more infrastructure, more productivity, and we have to create a heft where PSU will and have continued to play a role. Now, but of course, they must also compete, and if they don't compete, if they don't do well, they will fall by the wayside. There cannot be any artificial protection today. There cannot be any pumping up. Consumers are important. Everyone has to really compete in the market and do. So this is a very important thing, that when we are looking at this, we are not really saying that we have to prop up CPSCs. We have to say we have to enable them, and we have to encourage them, we have to facilitate them, but they must do it with their full vigor, or else they vanish. They wither away and vanish. So this is, if you really look at it, they are, many of them, they are really leading things in many ways. Now, one of the other contributions to the economy, for example, it is very important to have our flourishing MSME sector. Now, this MSME sector is, some of the PSUs may be in MSMEs, but largely, they are in the private sector. And more so, out of the MSME, you have the MSE sector, which is micro and small enterprises. As you know, that there is a certain amount of, protection given to them through under the MSME Act, where certain level of procurement needs to be done from the MSEs. Also, SC/ST enterprises, also women enterprises, and I am quite happy to note that PSUs are really meeting those norms, and they are fulfilling whatever is enjoined upon them. On important things like GEM, on procurement systems, there has been a tremendous, strides by the CPSCs. This is government e-marketplace, as you know, is a place where a lot of people, suppliers can come in, and transparent price discovery takes place, and the CPSCs have also joined them in full vigor. And if you really look at, what they have achieved, in 23-24, the CPSC's procurement through GEM has more than doubled to 2.5 lakh crore, which is about 2.5 trillion rupees, as compared to about 1 lakh crore during the previous year. So you can see from 1 lakh crore, they've increased it to 2 lakh crore through GEM procurement. So they have facilitated more and more goods and services are being procured through GEM portal. And this is benefiting a large number of enterprises across the board, across different parts of India, because it's much easier for anybody to access the markets through GEM than it would have been otherwise. So what is it that, our current, paradigm in relation to PSCs? We had a new PSC policy of 2021, Nevertheless, we also feel that, we need to understand the concept of holistic value creation in these enterprises. And that's now what we call it holistic public asset management strategy. As a secretary of Department of Investment and Public Asset Management, used to be called Department of Disinvestment earlier, but what we call it is DIPAM, which is actually looking at the capital management, and capital management is being looked at now holistically. In the recent budget, we eschewed a particular disinvestment target. We said that, we should look at things holistically. We should look at the return to shareholders, whether they are majority shareholders or whether they are minority shareholders. And what are we looking at in their performance? Because fundamentally, if you look at the value creation, the first point is performance. Now, how do we ensure the performance in CPSCs? Anything to do, as you know, if we say the performance has to be ensured, there has to be a certain incentive system, there is a certain environment in which performance is encouraged, in which performance is essential, in which without performance you can't succeed. So, it's a matter of a culture where performance becomes a culture. Now, this particular philosophy has to be ingrained and it has to be further seeped through. We have done a little bit, but we have to continuously do it. We have to go down further. We have to further improve because, the challenges are always to keep up when challenges keep coming. It's not a question of, we have achieved this milestone, but there will be something more challenge will come. So you have to continuously upgrade yourself, your organization, in order to really make performance culture as a part of your own culture. So one of the drivers that we have sort of envisaged is one, of course, that recruitment in case of the PSCs, there has been very, systematic way where there is a public services enterprises board. Regularly, they seek applications, merit is promoted, and within that merit, the people are picked up, and there is a certain amount of tenure. I'm talking of director postings, etc. Of course, down below also, there is a system whereby, the merit is also looked at. Of course, within the merit, whatever social benefits have to be given to certain categories, that is also given. But there is a general, within that, there's a norm for merit-based recruitment. And secondly, promotions based on certain criteria. So that's one part of it. The second is that how do they get it, their performance-based incentives. And what is called a performance pay, or sometimes called PL scheme, your performance-linked incentives. Now there, again, we have looked at several criteria and, conditioned them, modulated them in consultation with the CPSCs, and where we have included several of the key performance parameters which were hitherto not so important, have become more important. For example, for listed companies, in the market cap is important. Now, how is your market cap compared to your sectoral indices or your peers in the market? It is very important, how the market is viewing you. CapEx. It's very important to see what is that the market is looking at your growth opportunities with you. Export and import as a percentage of revenue. EBITDA as a percentage of revenue. Return on net worth or return on capital employed. A right kind of debt ratio. So either too much of debt may be bad, too little debt may also be counterproductive because you cannot grow. Asset turnover ratio. It's very important that you are rotating your assets in a manner, you are completing your assets in a manner where it converts into sales more quickly Because if it doesn't, your money is stuck, but your turnover is not coming. So your EBITDA is not coming. So we have to really see that the project completion is on time, and you have a proper professional project management while you take up the projects. Expenditure on R&D and innovations. This itself is also has been added. Now, these are the kind of things that we may have done. It is really encouraging and incentivizing them that, we must move forward on that, and that should be only. So it's not merely achieving a production target, which was sometimes, in a good old days, much more was focused on production. The point is, production for what? You have to generate returns. Production is not for production's sake. In many cases, you have to know the market. Markets are changing. If you don't change technology, you will again fall by the wayside. Our biggest of corporations, even in private sector, have been enroned. Or to some extent, I would say that where is a typewriter company, Remington? So it happens. If technologies change, you have to really change with the times. There has to be a greater degree of dynamism in the organization to perceive those changes and make certain amends earlier. So total returns to shareholders has become an important concept. Now, we have, much before, the SEBI has been talking about even for other companies, but we have actually come out with a consistent dividend policy for the CPSCs. We have enshrined capital management guidelines to see that the CPSCs, listed CPSCs, do all it takes to, whatever it takes to, encourage the shareholders as well as their employees and others, towards whatever means. Like, for example, the buybacks. The buybacks happen in public sector as well. When you got a bonus shares, they do happen here. When you say splitting when required, you have to improve liquidity, it happens. You have a consistent dividend policy. We don't say, I'll maximize dividend. Because if I just try to maximize dividend, I'll suck out their retained earnings and equity and will throttle them for growth, which is not the objective. But a consistent dividend policy is a signal that you must make profits and must also give it. And the consistent dividend is not really meant to be given only once in a year was in the past. In the annual general meeting next year, certain final dividend will be given. One in the final dividend coming. No, it has to come in forms of interim dividends, in terms of quarterly dividends, in terms of half-yearly dividends, so that, you are constantly on top of your profitability, and you're constantly on sharing, your returns with the shareholders as you go, while keeping in mind your capex needs. This balancing is important. There is nothing called this way or that way. In a corporation, in a company, you need to have several things to be balanced. You make an excess of one thing, you falter on the other. And this balancing is really the crux of our capital management guidelines and what we call the holistic approach to management of public assets. Look at our capex performance. It's important. Now, we were talking of about 11 lakh crore of capex in the budget, but that was only government budget. That means from the budget. On top of it, we have got this about 3.4 lakh crore, which the CPSCs from their internal resources and also, of course, from the debt which they will take it from banks and other or the corporate bonds they will raise, 3.41 lakh will be on top of it. This will be their own resources, not from the budget. Capex is important because Capex spurs growth. Capex is important not only for the company, also for economy as a whole. So this about 3 lakh crore is being contributed by the CPSCs every year. And 22-23, they did about 2.80 lakh crore, 100% achievement. In 23-24, they did 3.41 lakh crore, which was 105% of their target. And in 24-25 this year, they've already done about 33% of this as of August. In total, if you really look at CPSCs, you add to it the NHAI, you add to railways, you have in infrastructure about 8 lakh crores. I'm not talking of the states because there is a scheme for the government, the CAPEX special scheme for CAPEX for the states, where the 50-year loans are given. I'm talking of only the money which is being spent by this thing, CPSCs plus the other one. So these are the kind of things. Look at dividends. Now dividend is again a part of, as I said, the overall policy of, holistic management. In dividend, we have, if you look at from 2014-15, since 2014-15, about 4.83 lakh crore dividend has accrued to the government. In 23-24 itself, it was 63,000 crore. We had targeted 43,000 crore. We earned 20,000 crore more dividend. Again, not extracting dividend. As I said, consistently, but not by extracting, maximizing dividend, because that would throttle growth. So what the shareholder is interested in total returns. They must get projects and they must execute them. They must grow. And when you say, they must grow projects, it's not for project's sake. It's the projects which matter. It's the projects which deliver. It's the projects which give returns. So I would say that, and disinvestment itself is also a part of the whole strategy. Now, if you do not list them, then I think this value creation doesn't take place. Because suppose it is 100% owned by the government, somewhere thing, accountability is much, much muter. Where is accountability? It's only with the board, which will be a few people which is there. You go out and list in the market, you bring some people, then look at LIC. Even with 3.5% that we did as the listing, how much of accountability has come onto the LIC? For false sites, much murder, and look at the kind of various transformative steps they have initiated. Whether it comes of digital transformation, whether it is coming their DIPAM projects, whether they're coming in, their agency transformation projects. Some of the things which were not happening earlier have started happening because there is more of a market accountability. As I said, accountability has many, many dimensions. And one of the important accountability is market accountability. And sometimes it works better because analysts and others, they analyze the company very deep. They get into the statistics, they get into these quarterly results, they ask questions. So this is important. As I said, value creation, first point, performance. The second point, communication of that performance. And third point also, disinvestment strategy which is calibrated in order to supplement, in order to this thing, and not to really, Idea is, let us step into, and that's a message to our PSUs. If you're a listed company, think of yourself as representing minority shareholders. Think yourself as representing not the 51% or 60% or 63% or 70% that you have. Think of yourself as those minority, that 15%, 20%, 30%, which has been well distributed across the shareholders, and think it from their point of view. They have come here to invest, not for charity. They have come for making money, making returns. And you cannot give any sustainable returns on merely looking at charitable thing. To do good is fine, but you cannot do sustainably in a commercial enterprise unless you are inherently, sound, profitable. You control your cost. You control this. This is essential, because otherwise how would you grow? Where the money going to come from? And how do you really say the shareholders which has put them? But once you do that, Next time you want to go to the market to raise money, people will reward you. You'll come and put your stocks. Buy the things for you. So it's very simple. The point is, sometimes the simple things are not well understood. If the simple things are also well understood, I think that sets the ball rolling in a positive direction. Outcomes have been good. I would say I'm not really, markets are, keep changing. So we should not really be too much give on that thing. I'll not too much have on that. But just I want to give you a snapshot. In 3 years, the market cap of listed CPSEs has grown 3.7x, which is about from 12 lakh crore to 45 lakh crore. There is a value discovery. The people have, I think there is a level of confidence which is, on the PSU stocks. Their price overhangs which was existing there, that's gone. When the stocks are released, there is an enthusiasm among the investors to come and buy government stocks, but that's that it has happened doesn't mean it will continue to happen. If you slack on performance, you will be again given that punishment. So therefore, it's important to always keep our head high and always also keep your be level-headed and continue to do on performance. I think the bell has rung off. I think probably has taken too much of a time, but I needed to give you a comprehensive picture of PSU transformation that is taking place, and I think this will have to continue to work hard in order to see that they are on the right path. Thank you.